Hey all, welcome to ShareTrekc. This is Raj here. Guys, this is going to be a very, very small video, at the most 5 minutes. And this again is going to be on Ginkgo Bioworks. I came across an article on the TradingView platform, and that made me chuckle. I just want to share that with you because at this point of time, I really don't know what to make out of Ginkgo Bioworks. The share has been falling steadily. I have put a little bit of money in Ginkgo Bioworks, and I made some money already through covered calls. I made some money through covered calls on Bluebird Bio as well. But today I want to talk about that article on Ginkgo Bioworks, and I would like to get your sincere opinion about what you think at this point of time about Ginkgo Bioworks. So let's get started. Welcome back, friends. Ginkgo Bioworks has been falling steadily, and it seems that it has got plenty of more scope to fall down. But analysts, professional analysts, are having divergent views about Ginkgo Bioworks, and I'm still seeing a lot of positive press for Ginkgo. Here is one that I would like to show you. We are at the price chart for, let's go to Ginkgo Bioworks. And as you can see, friends, we had a whiplash kind of effect. Zigzag, or you can call it as a roller coaster. We went up and we came down, we went up again and we came down, and now as of the last trading day we have broken below 1.75, which is the support that we had last. Our next support is going to be at 1.64, and our next earnings is coming on November 13, 2023. Which happens to be a Monday, and the earnings estimate is minus 0.092 for the EPS, and revenue is going to be 47.883 million. These are the expectations from the street. In the past, Ginkgo has disappointed us with the earnings estimate, both on the quarter ending June 2023 as well as on the quarter ending May 2023. May 2023 was a very big disappointment, but they had a huge surprise on the revenue end, and as a result the share went up. But then we had the earnings on June 23, where earnings was again disappointing, but they had a good surprise on the revenue, and this time the shares came down before rallying. So I don't know what happened out there. So there is no consistency in behavior. At this point of time, I think the next earnings is what will determine any movement for the shares. And I do not think that the next earning is going to be much different from the past earnings. There is a very, very slim chance that the earnings might be just 0.002 positive or something like that. But I'm definitely expecting revenue to be better than the estimate that has been given out here, because they have had more new clients, and they should be doing better. But the revenue estimate is also much less than what was expected in the previous quarter. So that said, I want to share with you this particular news article, which is what prompted me to make this video. It says 3 stocks under $2 that could rally more than 90% according to the Wall Street. And it says cheap or lower price stocks have the potential to deliver exponential gains to shareholder over time. Typically, stocks priced below $5 are referred to as penny stocks, which might make investors wary of buying into these companies. However, mega cap tech giants like Apple and Amazon were once penny stocks too, and ultimately helped early shareholders build generational wealth over time. So this is the hook, and if we were fish, we'll just bite into this and we'll get stuck. And they are taking care of themselves as well, saying, while there are always risks associated with investing in equities, no matter how low priced, here's a spotlight on 3 stocks under $2 that could be poised to deliver money doubling returns over the long term, according to Wall Street. So they have covered themselves by saying there is always going to be a risk, but then they're appealing to our greed by saying there are 3 stocks under $2 which can give substantial returns, so-called generational wealth. They're talking about Pagaya Technologies. I don't want to talk about that because I've never followed that company. What I'm interested in is Ginkgo Bioworks out here. It says Ginkgo is engaged in the cell programming segment. Its platform is used to program cells that enable yada, 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 all those things about Ginkgo Bioworks. And they are saying widening demand for foundry services allowed Ginkgo to end Q2 with 63 active customers, up from 36 in the year ago quarter. And guys, remember, in the year ago quarter, they had less revenue also, and priced at 1.75 per share. Ginkgo is valued at a market cap of 3.71 billion. Out of the 8 analysts covering DNA, 3 recommend strong buy, 1 recommends moderate buy, 2 recommend hold, 1 recommends moderate sell, and 1 has a strong sell. So as you can see, guys, the analysts who are professionals who do this for a living do not have a uniform view of it, or they are not even close. They're all scattered across the entire spectrum of possibilities, and the average analyst price target is $3.38, indicating a potential upside of 93%. Well, friends, what do you think is going to happen? Let's have a bet. I think that the lowest that Ginkgo Bioworks will go is $1.49 before the earnings that's due for the next quarter. So that's my bet, and you can put your bet in the comments below and let me know what you think about Ginkgo Bioworks. It seems that they are talking a big game. They have a huge amount of money in the balance sheet, cash in the balance sheet. They have foundries and facilities, hundreds of collaborations. And now they have started success-based pricing, which in my opinion seems to be either a sign of confidence or a sign of weakness, one of the two. And probably they're in a weaker bargaining position. But at the same time, when you look at the examples they have given in the article about penny stocks becoming generational wealth builders like Apple and Amazon, it makes you feel that probably DNA would be like the Microsoft, and it's going to grow, and we just need to hold on. So fortunately, if you talk at a share talk about this as a share which is under $2, buying 1,000 shares and forgetting about it is not a problem. And whenever there's an opportunity, you can sell a cover call and recover your a little bit of your cost price and reduce the total cost of ownership of these shares. Over a period of time, if the price is going up 93%, that just means a few, maybe a doubling of the price of the share. So there is decent amount of money to be made. Of course, there is risk. So I would say that just put your pocket change in this, not everything. And then it should be fun. But if you put everything into this, then you're in for a rude shock. So you have to be careful. And one of the things I think I learned as an investor, with painfully, of course, because I put a lot of money on Yellow Pages, which was giving heavy dividends. And then suddenly one day it was all gone, including my capital. So I would say that always distribute your risk, distribute it across sectors. And friends, genomics is a high risk sector at this point of time. Even pharmaceuticals, for that matter, has got high risk because candidates can fail in the pipeline and lots of money can be lost. There could be recalls. So genomics is a high risk game. The rewards are also very high. So higher the risk, the higher the rewards. So always be careful. Think very carefully before investing your money in genomics. And even in that, don't put all your eggs in one basket. Divide it around, and ETFs would probably be a safer way to go in for people who do not have the time to follow, because I think in genomics you have to follow these companies on a regular basis, and still you may miss out opportunities, and still you may miss out reading some risks. So be very careful out there. And I'm curious to hear your opinions about Ginkgo Bioworks. What is the lowest Ginkgo is going to fall before the next earnings release? I am saying somewhere around $1.42 at the lowest. I'd like to hear from you. That's all for now. Bye for now. Take care.